Welcome to JSR Voice. Now I want to discuss with you income from capital gain, problem and solution. Let us go to the discussion. And those who want to actually listen this class, first of all you have to go through the introduction class. First lecture what actually I discussed with you all for income from capital gains, because that is the introduction one. If you want to do any solutions for any problem, that is must. First watch that lecture and then come to this class so that you will understand problem and its solution. So let us discuss one question. This is one question that I am going to discuss with you for income from capital gain calculation. Let us discuss the question. I have been telling to everyone in every video that understanding question is very important. If once you understand the question, if you know the procedure to do the solution, then you will get the answer easily and correctly. Okay, so let us go to the discussion. So here Sri Sai Chand. Sri Sai Chand is one assessee. Okay, Sai Chand is assessee, and here he is purchasing gold ornaments. Gold ornaments, nothing but jewelry. So jewelry is a non-financial asset. Okay, so I told in the previous introduction lecture that assets are two types, financial and non-financial. So non-financial assets means that we can the assessee can held it, the assessee can acquire it physically, and those are tangible. So one of the example that I gave under non-financial asset is gold ornaments. Okay, so gold ornaments is non-financial asset, and under non-financial asset for land and buildings 2 years period to determine whether that is short term or long term. For other assets, under other assets what will come? Plant and machinery, equipment, gold ornaments, jewelry, this all comes. So 3 years period should be taken into account to determine whether that asset is a short term asset or long term asset. Okay, so here it is gold ornaments, so 3 years period should be taken into account to determine whether that asset is a short term asset or long term asset. And here gold ornaments are purchased by Sai Chand for how many rupees? 2,05,000. So 2,05,000 is original cost of the asset. Okay, he purchased for 2,05,000 some gold ornaments. So 2,05,000 rupees is original cost of the asset. And when he purchased in the financial year 2001 and 2. So here now we are going to calculate income from capital gain during the previous year period. What is our previous year period now? It is 2023 and 24. That is the previous year period for us. Okay, so he sold that asset during the previous year period. That is why we are calculating income from capital gain. So when he purchased in 2001 and 2, so from 2001 and 2 to 2023 and 24 till previous year, so he actually held that asset for more than 3 years. Okay, so he actually held that asset for more than 3 years. So it is what asset? Long term capital asset. Okay, so next, because the asset was purchased in 2001 and 2 year, and next when he sold during the previous year is 2023 and 24, till that period he actually held it for more than 3 years. That is why we have to treat these gold ornaments are long term capital assets. Okay, and next, during the previous year he sold the ornaments for rupees 10 lakhs. So he is selling these ornaments for rupees 10 lakhs. This is the selling price of those asset. Okay, selling price of the asset, selling price of gold ornaments. So what is the selling price here? 10 lakhs. 10 lakhs is a consideration received. Okay, so selling price is called as consideration received. Here consideration received is 10 lakhs. And transfer expenses also are called as selling expenses. Okay, selling expenses how much here? 45,000. Selling expenses, transfer expenses, both are same. Okay, you should note it down because these we are going to deduct from consideration received in the format. Next, cost inflation index number. Here according to income tax Act, for every year they give some index numbers, okay, for tax, for calculation of all these capital gains. So cost inflation index means CII number, okay, that is in the year of purchase. So when he purchased in 2001 and 2, so 2001 and 2 number is 100, index number is 100. We need that, I will tell you where we need in formula for calculation of index to cost of acquisition, okay. And in the year of sale, when he sold during the previous year, okay, so in the year of sale the index number is 348. So previous year number is 348 and purchasing year index number is 100. And what they are asking, calculate income from capital gain. So let us solve it, but before solving let me discuss it one more time. Here Sri Sai Chand is assessee, and he actually have capital asset of gold ornaments, that is non-financial asset, and it comes under other assets category. So 3 years period should be taken to determine whether it is a short term or long term asset. So this asset was purchased in the year 2001 and 2. So till previous year, what is our previous year? 2023 and 24, okay, 2001 to 2023 and 24, more than 3 years period assessee held that asset and then he sold it off. So we have to treat that asset as long term capital asset, okay. So if it is a long term capital asset, in format we are going to calculate index to cost of acquisition. If it is short term, we are going to take cost of acquisition, okay. So this is long term capital asset. And next purchasing price is 2,05,000, and next transfer expenses are 45,000. Selling price means consideration received, that is 10 lakhs, okay. And index numbers are given for 2 years, purchasing year index number and sale year, in which year he sold, previous year. So that is 348, and they are asking us to calculate income from capital gain. Let us solve it. So here let us go to format. This is a format that we are going to follow, okay. So first we are going to record the name of the assessee on the top in the heading. Always, what is the heading that we are going to give? We are going to give the heading as computation of income from capital gain, okay, of Mr. Name of the assessee should be recorded here. So what is the name of the assessee here? Sri Sai Chand. So Sri Sai Chand, okay. So computation of income from capital gain of Sri Sai Chand for the assessment year 2004 and 5, okay. So we have columns, particulars, amount, and first always here we are going to take consideration received, okay. I explained this format in the first lecture in the previous video, and those who did not look into that, those who did not watch it, you go there, okay, go to playlist, okay, there you search for income from capital gains playlist, there you will find the video. First video is introduction class, I explained about the format, okay. So you can go through that. And next let us go to the solution. First item always is consideration received. So consideration received means selling price of the asset. Just now we discussed what is the selling price here. It is 10 lakhs. So we are going to take 10 lakhs here first. Let us take 10 lakhs. Okay, we took 10 lakhs in the place of consideration received. Next, less selling expenses or transfer expenses. So that are available in the question. Just now we discussed transfer expenses are how much? 45,000. Let us write here 45,000. Okay, so we should deduct this 45,000 from 10 lakhs. How much we get? That should be recorded here. We get 9,55,000, and we should name it as net consideration, okay. What we have to name? We have to name it as net consideration, okay. So we have to name this 9,50,000 as net consideration. And next we should deduct next one. What is the next item? Either cost of acquisition we should deduct or index to cost of acquisition. When we deduct the cost of acquisition, if our asset is a short term capital asset, Okay, if our asset is a long term capital asset, we deduct here indexed cost of acquisition. So what kind of asset that Sri Sai Chand has, that is long term capital asset, because it is jewelry, and 3 years. If it is land, suppose for example, if it is land and buildings, only 2 years period taken into account. But this is gold ornament. Gold ornament, 3 years period should be taken to determine short term or long term capital asset. So here he actually using that asset for more than 3 years. Okay, he actually the asset is held by that asset for more than 3 years. So it is long term asset. We need to deduct index to cost of acquisition, not cost of acquisition. Okay, so here I will remove this cost of acquisition. Okay, so do they give in the question index to cost of acquisition? No, we have to find it out. Okay, there are formulas. So two models formulas are there under two models. First one is if the asset is purchased by the assessee before 1-4-2001. When is purchasing asset? During the year 2001 and 2. So during the year 2001 and 2 means it may be in between April 1st 2001 to 31st March 2002. Okay, so he purchased that asset after 1-4-2001. After 1-4-2001 he purchased it after that. Okay, not before that. So which formula we are going to take? First one is if the asset is purchased before 1-4-2001. He did not purchase before 1-4-2001 because he purchased during the period of 2001 and 2. Okay, means after that only. So we don't take first formula, we are going to take second formula. Okay, what is our second formula? If the asset is purchased by assessee after 1-4-2001, our assessee is purchasing it after 2001. How we came to know? Because he purchased during the period of 2001 and 2. So he purchased after 1-4-2001 only. So we are going to take this second formula now. Okay, hope this is clear for everyone. So we are going to use this formula and we are going to substitute the values. Okay, so what is the formula here? Let me show this once. This first formula we are not going to take. I will delete this. Okay, I am going to delete this. So we are going to take a second one, not first one. Okay, so model 2, we are going to take model 2. And here we are going to calculate the values. So what is model 2? Indexed cost of acquisition. This why we are following this model 1 and model 2 formulas? To calculate indexed cost of acquisition. Okay, first one we don't want because that is not suitable for our problem, because our asset is purchased actually after 1-4-2001. So we adopted the second formula. So what is this formula? Indexed cost of acquisition is equal to original cost of the asset into previous year index divided by index of the purchasing year. Okay, so let us substitute the values. First, indexed cost of acquisition is equal to original cost of the asset. What is the original cost of the asset? For what price he purchased? 2,05,000. So let us take 2,05,000 here. 2,05,000 into next previous year index. Previous year index is what? 348. Okay, in the year of sale the index number is 348. So let us take 348 here. Divided by what we are going to take now? We are going to take index of the purchasing year. So when you purchased 2001 and 2, so what is the index number? That is given in the question. So in the year of purchase the number is 100, they said. Okay, so here in the year of purchase the number index number is 100. So let us take 100 here. Now you can calculate this. Okay, if you calculate how much you get, that should be checked, and that is our indexed cost of acquisition. Okay, I will use the calculator and I will calculate, and I will write here. So 2,05,000 into 348 divided by 100. So we get 7,13,400. 7,13,400. Okay. So this is our indexed cost of acquisition. Let us record in the formula. 7,13,400. Then we should deduct this value from the previous value, and we should see how much we get. 9,55,000 minus 7,13,400. Okay, 9,55,000 minus 7,13,400. We get 2,41,600. 2,41,600. Okay, and here 2,41,600 we have. And next item that we have to deduct is indexed cost of improvement. When we deduct indexed cost of improvement, if any additions are made to the original capital asset, but in this problem there are no additions for the original capital assets, so no indexed cost of improvement. Okay, so you can remove it, otherwise you can write nil also. It's your wish. If you don't want to write, you can leave it. Otherwise you need not to write. Okay, if you don't want to write, you need not to write, but if you write, you can write nil here. And then again what we get 2,41,600 only, same amount we get. Okay, and next we have to give deductions under section 54. In the question they did not say anything about deductions under section 54, so it is also nil. It is not available in the question, so we are not going to record that also. It is also nil. And again if you deduct the value, nil value, from 2,41,600, we get same value again, 2,41,600. Okay, so this is our income from capital gain. That is the answer, income from capital gain. Okay, so this is how we do income from capital gain solution for any problem under this chapter. Okay, I will show you what I discussed with you now. So this is a question that we discussed. So in this question you should see what is the selling price, that is known as consideration received. You should see whether transfer expenses are given or not given, and transfer expenses other name is selling expenses. Next you should see what is original cost of the asset, and main important thing is whether the asset is short term asset or long term capital asset. You should determine that also. You should take index numbers. Okay, so we actually identified all those, and we took from the question and we substituted the values in the format. Okay, just we took all the values in the format. This is a format that we took for every capital gain problem. This is a format that we are going to follow. Okay, everything we recorded here, but here one thing we calculated, indexed cost of acquisition. For calculation of that indexed cost of acquisition, two formulas we have, and we took model 2 because our asset is purchased after 1-4-2001. We should see that date, whether after purchases are made or before purchases are made. Okay, 1-4-2001 date, very important. And we took the formula. This is a formula we took, and we calculated indexed cost of acquisition here. So hope this is clear for everyone. So this is how we are going to solve this problem. If you understand the class, like the video, share it and subscribe the channel. Thank you.